In the metals quadrant today, taking a look at the August gold contract, which has dropped 2 of the last 3 sessions, but remains in a small up channel. Since dropping 3 straight sessions from May 21st to the 23rd, gold is actually up 0.52% on fairly modest volume, waiting for some fundamental shift to drive prices higher or cause them to correct lower. And so far, at least over the last 6 or 7 sessions, it has not found that driver. The high today, 23.7310, was up 16 basis points, just short of 0.2% better. And the downside today, the low, 23.3510, was down 1.44%. We finished today down right around 0.8%. Now, traders can learn a lot of things about market sentiment when you're looking at correlations and shifts in correlation. And gold has usually had a strong positive correlation to the Swiss franc, but in February of this year, we had a shift to a strong inverse correlation. As a matter of fact, over the last 120 days, that correlation was negative 90, meaning when the Swiss franc is down, gold tends to be up about 90% of the time. That's sort of what that means, and vice versa. But what happened since February is gold was rising and the Swiss franc was falling. But over the last 30 days, it's gone back to positive 8, which we basically call uncorrelated. But if we're shifting back to a positive correlation with gold and Swiss franc, that would mean they both become flight to safety assets, which is what they have historically been and why they've historically correlated. So you want to keep an eye on that. Also, we have fresh 2-month lows on the dollar, and that kind of helps keep a floor in gold, along with yield dropping, the market putting 2 rate cuts back into the market for 2024 from the Fed, one in September, one in December. It has those as the highest probability, but not high probabilities yet. And that's helping gold stay in this small up channel that I mentioned, because rate cuts would be bullish for gold.